Happy Monday. Thanks for joining us here on the Market Day Report. I'm Marlon Bowling with you, your tour guide to the ag commodities. Well, as we get things rolling here on a Monday morning, USDA started things out a little bit ago with the word that we had what we would call an overnight export sale. In this case, it would be a weekend export sale, and it was a fairly sizable amount. Let's take a look. It was 507,000 tons, and it went to unknown destinations this time. And of that total, they say 249,000 tons is for delivery this marketing year. 258,000 tons, slightly over half of it, is withheld for a year from now. So here we go again with these deferred purchases. Interesting, or deferred deliveries, I should say. So it leads one to think that that is kind of a standard tack of China when they purchase things nowadays. And I want to bring in Brian Hoops of Midwest Market Solutions to talk about that. Does that give you a clue that that may be them actually doing the buying this time?
Hey, good morning, Marlon. Yeah, you have to really assume it is going to end up being China. This unknown destination is kind of a cover for them, it seems like. And with the amount that we saw, it's a sizable amount. And so there's very few countries that would take that sizable amount, even if it's spread over 2 marketing years. So it really, trade's going to believe that it's going to end up likely being China. It's been rumored that China's been buying some soybeans off the Pacific Northwest anyway. And so this lends further credence to that rumor. Really, market focuses not only on these export numbers, because this is what we assume is going to happen, is when we have tighter supplies in other countries, export business will flow to us, but also watching that weather in South America real closely. There's been forecasts for several weeks now that a return to La Nina around the 15th of February is imminent, and it looks like Argentina and southern Brazil are both going to see hotter and drier conditions than what they normally would expect. There's going to be decent rains in northern Brazil, even central Brazil, but that blocking feature then sets in and keeps things very warm, very dry. And a lot of the corn crop, I was just talking with another client about the corn crop in Argentina. About 35% of that is in the grain fill stage, 60% is silking. It's a bad time of the year to have that type of numbers in the reproductive stage and have hot and dry conditions.
Well, Janet mentioned a little bit ago that we had higher trade overnight. Here's a look, and let's go back to the big board here. Our quotes provided by Bar Chart show March corn a dime higher overnight at 630.5, and the nearby months are showing the most strength. You go out to December, the new crop month, it was up 4 3/4 this morning at 578.5. Now on the soybeans, where we just had that new export sale announcement. Soybeans on the March contract were 23 3/4 higher overnight at 1577.25, got as high as 1584.5. In the new crop November soybeans in that overnight trade, well, we had it trading at 14.15 per bushel, so it leapfrogged over the $14 mark. It was 19 1/4 cents higher in the overnight trade. Meanwhile, in the wheat in Chicago, we had the March contract gaining 7 1/4 cents at 770.5. July, by the way, was up 8.5 cents. In Kansas City, you had March 8.5 higher at 794 1/4, and July hard red wheat was 7 1/4 higher at 798. Minneapolis wheat on that March contract overnight was 10.5 higher at 923.5. We'll come back and talk more with Brian. We'll focus now on livestock when we come back. Thank you so much for joining us here on a Monday. I'm Marlon Bowling with you. I am joined by Brian Hoops. He's the president of Midwest Market Solutions. All right, let's examine what took place in our livestock trade. On the livestock summary, Brian, we had some trade that was actually, well, pretty steady with what we had the rest of the week, but overall that 136 to 140 range was several dollars higher than what we had the last week. Before that, and that had been kind of stuck in a rut there for several weeks. Dress basis sales were 220 to 224 last week. Again, just like on the live side, they had gained a few dollars over what they had the week before. Divergence in the cash hog trade, though, depends on if you're talking live hogs or if you're talking carcass basis hogs. Now, you had the carcass basis hogs going down over $3.50 last Friday, and you had the cash live basis hogs up to 68. That was interesting. Why are they going opposite directions there?
Yeah, that's a good question. Not really sure of what the answer is for that as far as what the hog direction is going. I know we had a pretty good run for the entire week last week as far as hogs. So we had a pretty good movement to the plus side. Friday looked like a pretty big drop. The cattle market last week was very strong, $2 to $4 type gains. I don't expect we're going to see that type of strength this week. More maybe a steady to $1 higher trade. I was real disappointed with the Saturday slaughter that we saw, and that Saturday slaughter was much less than even a week prior to that, and that limited the advance for the cattle market as far as our weekly slaughter goes. So we came in below previous week, below year-ago levels, and maybe that's a sign packer demand starting to back off just a little bit at these higher prices.
All right, so on live cattle last Friday afternoon, we went home into the weekend with the April contract actually up 12 cents at 146.87. And June was down 15 cents at 141.37. Most contracts were higher with the exception of that June all by itself there. On the feeder cattle market, well, we wrapped up the week with March 62 lower at 166.10, and you had April 37 lower. It was at 171.42 as we headed home for the weekend. On the lean hogs, now we had the futures on the February 57 higher. All the other months were over $1 higher. April was up $1.70 at $100.07. Brian, just to kind of dovetail with what you were talking about a little bit ago, you mentioned that we had the higher cash cattle trade out in the country. But if you look at the wholesale beef cutout values that were posted by USDA on that afternoon update, we continue to have weaker prices here on the wholesale beef cuts. They were down $1.65 Friday afternoon on choice, down 42 cents on the selects. How long can we keep this up if you have the cash cattle continuing to go higher, but the wholesale trade seems like it goes lower each and every day?
Right. You watch what the slaughter pace does. If that starts to slow down, the boxes will probably catch a little bit of a bid here and stabilize. Packers still have really good margins to work with, about $340 a head. So I don't think there's a real concern at this point in time about the Packers and their margins that they're working with. Even with the declining boxes, that is cutting into their margins, but they paid up for the cash market. So certainly margins got hurt a little bit last week, but they have a lot to work with, and slaughter pace is going to be the key here, determining the direction of those box beef values and the cutouts.
Okay, well, we'll open things up at the bottom of the hour. Looking forward to that. Thank you, Brian. Appreciate that. That's Brian Hoops of Midwest Market Solutions. Janet, we're about ready to kick off the session.